Good everyone, Les here, Chief Analyst of BG Trading Australia. Hope you are well. Today is 31st of July 2024 and we had great news that CPI came in line to the expectation, so which suggests that we have now a strong likelihood that interest rates is going to be kept on hold next week. Obviously, there is no 100% certainty on this, but the bottom line is that CPI came in line to the expectation of RBA and also of most economists in the country. So I'm not going to get into details of the CPI, but the idea of this video is to see what exactly today's data has influence into the market and what are the stocks that we are now projecting that will take advantage of today CPI data, and especially if it's confirmed that RBA is not hiking rates next week. Let's have a look. Remember, this is not a financial advice, blah, blah, blah. And if you want to become a member, just subscribe the channel. And also we have this free Facebook community. Just jump that in. Details in the description below. I'm not going to go in details because you already know that anyway. So, Appen is a stock that we analyzed yesterday and is here in the channel. It went up 50% yesterday, and we managed to lock 33% over our original position, and that was a great result. $10,000 profit. The stock has reached as high as 86 cents, and I warned my VIP members yesterday, and I think in the video on this channel I also spoke about this strong resistance level of 80 cents, which the stock would be very likely to bounce or to test this few days on a row. And that's exactly what happened. Appen APX went up to 86 cents and then hit 86 cents and closed below this resistance level. That suggests a stronger selling activity around the resistance level that was expected. We might see a few days of the stock trying to break out, and we may see Appen moving towards the next resistance level. Nevertheless, we took most of our risk out of the table, so we sold most of our stock to lock in $10,000 profit so far, together with some of our VIP members. So if you're interested on our VIP membership program, just go with bgtrading.com.au, have a chat with us, or simply choose one of our plans. Now let's talk about some of the stocks that could directly benefit from RBA maintaining interest rates on hold, not hiking interest rates. So the first one I want to talk about is Kogan. Kogan is a retail stock, has released its quarter results yesterday, and we have even put the stock analysis about Kogan, updated stock analysis, which are exclusive for our VP members. So about Kogan yesterday, we've been covering every single stock that we see opportunities. We've been covering in this channel and also for our VP members. But essentially, almost every single key fundamental metric for Kogan was once again positive, except for the gross sales in this last quarter that declined 1.5% year on year. But that was expected because, we are in Australia with high interest rates. People tend to spend less. However, this is a very positive result because if you look at the stock has fallen 54% from recent peaks. When the company shows to be turning around from a net loss position into a net profitable position, and that's exactly what happened. But provided there was a crash, pretty much a crash over 50% on the stock price, it's very fair to say that this quarter update was very, very positive. The market overreact. Initially, the stock soared and then all of a sudden end up really low. But I believe this market reaction was triggered by the fact that most of our traders or investors wanted to see what would be the outcome of next week's RBA position in terms of interest rates. Because if interest rates hike again, then that will directly affect consumer discretionary stocks like this. And if you have a mortgage, my friend, then you're likely to be spending less, buying less in sites like Kogan because you have less money. Now, if your mortgage payments stays the same, then that's not going to affect negatively as it could if interest rates are hiked. So gross profit has increased 1.5%, modest increase, which is positive as well. But this is what I like, the adjusted earnings before interest and depreciation and tax. So it's up 38% year on year. That's exactly what I wanted to see. And that shows that the company has not only in a stronger position than the last year, but it's in a profitable position as well. And it's far better than it was when it was trading at $6-7. Adjusted EBITDA, it's also, this is 38%. The adjusted EBIT in the quarter was up 105% year on year, which is very, very positive. Again, only positive results here except for the gross sales, showing that the company has been indeed turning around. The balance sheet is still reasonably strong with $41 million in cash and no external debt by 3rd of June. That's positive. Okay. So overall, I'm expecting Kogan to test this long-term moving average, but most importantly, the stock is trading at technically discounted price with strong outlook, especially if we have monetary easing, which means rather than interest rates hike, we start looking towards interest rates cut here in Australia. That would be the ultimate goal. The relative strength shows a very constructive bullish convergence here towards the upside, and showing that we most likely will see now that we have a financial confirmation. Obviously, still we need to see the full year result, but everything is pointing for a positive full year result. So we should see Kogan start heading up again potentially. I think this is kind of has reached the bottom, and this is a strong multi-year support level around $4 to like $4.20 level. So very positive here as per the chart formation. So everything we need to take a position into a stock. So for us, Kogan is a buy. Obviously, don't make your decision based on what I'm saying here. Go and do your own research. Talk to your financial analyst. Remember, we trade under SFL exemption clause, so we cannot provide financial advice. So you need to talk to someone that can provide you with a full financial advice. Okay. Another stock that I really liked, and everyone knows I like that, and the reasons what I like, and is in the same sector, and everyone knows why I like, is CRYP Limited. So what's going on here? So unlike Kogan, I gotta say this, CRYP is currently being traded by a narrative, if you know what I mean. So essentially there's a lot of negative narrative going on in this stock, but when I do my investment or trading decisions, I don't care about the narrative if I'm holding for a little while. So I wanted to what I really want to worry about is what the fundamentals is playing at the moment. Is the company improving its business, its outlook, positive or negative? And I can tell you, Cetire has only positive outlook at the moment, provided as per the last few market update. Full year profitability is still increasing, EBITDA is still increasing, but the analysts are sort of have been speculating that the company will be declaring a net loss for the last quarter. Now, let's face, even if you declare a net loss for the last quarter, the stock has crashed from $5 to $1.34. So that's a considerably de-risked level. And it's currently trading, is hitting this downtrend line there really hard. As you can see, I'm going to zoom in for you. It's hitting this downtrend line really hard, and it struggles to break out. But as soon as it breaks out, I believe we should see the stock start going up again. This is what it has been playing now. Since 180 and then down to 170, 160, and then now around 135. So really we need to see some buying activity here. But I'm comfortable with this stock at the current price, because the outlook and the company's fundamentals are very, very positive. And as long as the fundamentals and the outlook is positive, I'm very confident on making my trading decisions in there. All we need to do sometimes is wait a little bit longer, as we did with Appen and many other stocks, but sooner or later they will end up rewarding shareholders if the fundamentals are there. Remember, those stocks, they are highly short traded. People that make money out of the fall, selling the stock at high and buying back at the low levels, so making money with differences. Unfortunately, that's how the market plays, up and down. But the buying forces should be coming back in the worst case around $1. I strongly believe in this. Okay, so at the moment for me, this stock is also a buy for that particular reason. Harvey Norman is another one. Harvey Norman is not just a retail stock, but also has reached our target the last time that we traded. Okay, it's trading above our last target, so we made money. So it's not only a retail stock, but also a real estate company that does sort of own a lot of the asset, has a lot of income from the actual property portfolio. I have a full analysis about Harvey Norman in our stock analysis library. So if you're interested to have access to this analysis, just put in the comments below and I will send the link for you. Okay. Outlook for Harvey Norman is positive, is a high quality stock, and I also have no problems of holding this particular stock. Would I be buying now? Not. I'll normally wanted to be buying at technically discounted price or a technically fair price when it's a high quality company, and at the moment it's a little bit above what ideally we like to. So ideally we want to be buying at the low $4, not at the high $4, if you're going to trade this. Okay, so those three stocks are the ones I wanted to cover. And then finally, just to wrap this up, let's have a look at the S&P SX 200. Is it going well or not? So look, very positive. Looks like we're breaking out again to a new high. Exactly what we wanted to see again. The S&P ASX 200 is trading high. I think what was holding back our index was the fear of interest rates hike. And since this fear has faded based on today's CPI announcement, I think we are good to go for another month or two, until we have the next CPI. So outlook for S&P SX 100 is positive again, and we're expecting to reach around 8,400 in the short term, and then we will see what the chart formation will be after that. So further breakout, positive RSI as well. Long position to hold. Wouldn't be shorting at the moment. And that brings to the end of our video. Let us know what you think, and thank you for watching to the end. See you next video. Bye.